Welcome back. Now, the plan by Nigerian government to close Abuja's airport for runway repairs takes effect from midnight today, and the closure is expected to last for 6 weeks. Passengers will be diverted to Kaduna Airport, about 160 kilometers north of the capital. They will then be transported on guarded buses to Abuja. For many, all these come at a cost.
The Kaduna Airport has primarily been used for domestic flights, with Abuja Airport handling 4,859 domestic flights in December, compared with the 171 that flew in or out of Kaduna. Dinoada Kenny, a worker at the Irish Embassy in Abuja, says they had to change the date for St. Patrick's Day celebration due to the airport closure.
St. Patrick's Day, the Irish National Day, is on the 17th of March. But due to the fact that the airport would be closed, we wanted to bring musicians from Ireland to help us celebrate our National Day. So they had to come. They came last Tuesday, and they're going home today. So we had to reschedule St. Patrick's Day to the 3rd of March.
It's already affecting me because I just missed a flight to the largest cocoa growing country in the world, Cote d'Ivoire, for a meeting, and I have to move to Lagos. I hope the economics are understandable, because the extra cost and the delay for not moving tomorrow, which should have still been on time, is to move to Lagos, and all those costs will be borne by us.
The government, which announced plans for the shutdown in December, hopes international carriers will use Kaduna as an alternative during the closure. Taxi and car hire companies that operate within the airport say the change will come at a cost to their businesses.
We have to set up a desk. We have to set up like a car parking. Yeah, it's going to be extra cost, but it's not a bad idea because we have a stand there.
We have no choice. Whatever happens in our business, we have to manage with whatever we have. So we're going to lose a lot of customers. So nothing we can do about it.
Airlines, including British Airways, Lufthansa and South African Airways, have refused to fly into Kaduna. South African Airways spokesman Delali says his company's decision not to use the Kaduna option was due to operational concerns.
The reason why we did not, or it has not become possible for us to consider other options that were presented to us, including an option to fly to Kaduna, is the fact that Kaduna is far north of Abuja, where we ordinarily fly to, and we took note of the fact that this might have an impact on our operations in a number of ways. We felt that it was not going to best serve the interest of both the airline and the passengers.
The Abuja airport runway had deteriorated to such an extent that some major international airlines had refused to fly there, and some aircraft reported damage to their undercarriage.
Nestle Nigeria last week published its full year 2016 results, posting earnings per share of 10 naira, representing a decline of 67% year-on-year, below expectations. Research analysts from Exotics Partners believe the results are weak relative to historical performance. However, in the context of the current environment, it is satisfactory. Let's talk to an equity analyst with Exotics Partners here in Lagos, Olabisi Ayodeji. Good afternoon. Thank you very much for joining us, Olabisi.
Good afternoon, Chimi. Thanks for having me.
Yeah, and of course, let's begin. I must say, happy International Women's Day.
Thank you. Same to you.
Now, bring us up to speed on your views on Nestle Nigeria's results. You say, although it is weak, it is satisfactory. Talk to us about this.
Okay, so we think the earnings results were weak. First, relative to historical performance, it came in weaker. But then, if you consider how Nestle performed on operating profits level, you can see that its 2016 results actually came in higher, roughly 16% year-on-year. Now, we believe that this was driven by price increases as well as volume increases in the year. And we think that for the discerning investors, it's more important to focus on how the business has performed on your operating basis than how EPS performed, considering that bottom line was weighed by FX losses
Now, looking at Nestle's results, does that indicate the trend we are likely to see on the earnings of other companies in the consumer goods sector?
Well, actually, we believe that the performance for the general sector might be mixed. This will depend on the gearing of the individual businesses to imported raw materials and products. For example, at GSK Nigeria, we expect that operating performance will come in weaker than Nestle's did, and this is because that business has a higher dependence on imported products, especially in its pharmaceutical business where all the products are imported. So considering that the Naira has trended lower last year, we think that the trend will be mixed, just to summarize, depending on the exposure of each business to imported raw materials and finished products.
Now, with the recent intervention of the central bank in the FX market, we've seen some kind of appreciation of the Naira. That's a little bit at a parallel market. What are your expectations for these companies in the subsequent quarters? We're still expecting the first quarter reports.
Well, considering the FX liquidity challenges that we saw last year, we think that any appreciation in the parallel market will be positive for earnings for consumer businesses, because a lot of them have had to source for foreign currency in alternative markets. So if the Naira does indeed continue to improve in the parallel market, it will serve as a positive. What's key, however, is it's an improvement in the liquidity in the official market, because this will be able to allow businesses such as Nestle, for example, to settle FX liabilities that it currently carries on its books. And that, in turn, will reduce FX losses that they will have to record, which will drive earnings growth going forward.
Now, as an international company, do you think Nigeria's current economic challenges could or have any implications for future investment by the parent company in Nigeria?
Well, we think that additional investments might be tempered, and this is because of the weak operating environment. I think instead the focus for these businesses would be on managing what's currently existing. So in terms of, for example, additional product launches, we expect that possibility is that management of these businesses will focus instead on managing existing brands in their portfolio until the general operating environment starts to recover.
Of investment, you are recommending a buy on Nestle Nigeria. Why?
Well, as of the time when we published the report, Nestle's stock was down at the time, roughly 30% year to date. And at the time, it was trading quite attractively. And so we figured that, considering that then it was trading roughly 20% at a roughly 20% discount to global emerging market peers, and Nestle has superior profit margins and profit returns and relative to these businesses, it was an attractive buy to us at the time. We think that, similar to what we've seen in 2016, operating performance will remain strong in the medium term, and this basically is what leads our recommendation on the stock.
All right, thank you very much for your time, Olabisi Ayodeji. Thank you for your time. And that's it on the program. Thank you very much for watching. I'm Chimeze Obi. You're welcome.